I'm Brownfield commodity market reporter John Perkins with the closing market minute for Wednesday, August 6th. Soybeans and corn both ended the session lower, continuing to largely focus on the generally favorable crop conditions in much of the Midwest and Plains. Now, there are some longer-term uncertainties and the potential for a hotter, drier weather pattern in parts of the region later on this month. But for now, the trade's taking a wait-and-see attitude and definitely seems to be dialing in some pretty big crop numbers on both beans and corn. Really, right now, the difference is demand. New crop export demand for U.S. soybeans is off to its slowest start in a number of years. China's absent from the market due to tariff tensions and Brazil's price advantage. Meanwhile, new crop U.S. corn export sales have been strong. The USDA's weekly numbers are out Thursday morning. Wheat did finish modestly higher, oversold and due for a bounce, but those gains in Chicago and Kansas City were limited by the growing global supply of winter wheat. Meanwhile, Minneapolis continues to keep an eye on the early spring wheat harvest activity here in the States, along with rainfall chances for parts of the northern U.S. plains and the Canadian prairies. Live and feeder cattle were sharply higher, supported by the midday strength in beef, waiting for this week's direct business to get underway. Asking prices are $238 to $240 live, nothing yet on the dress basis, and no bids have been reported either. And hogs ended the session mixed on spread trade, profit-taking, and the lower midday move in pork, along with general demand questions. Domestic wholesale demand has been pretty inconsistent as of late, up sharply one day, down sharply the next. And of course, pork demand from China continues to be a significant question mark for hogs. With the closing market minute for Wednesday, August 6th, I'm Brownfield commodity market reporter John Perkins.